If you are sitting at your kitchen table this morning, quietly sipping your coffee and checking your bank app just like you do every single day of the week because you are worried about that strange notice you just received from your bank, or you are simply trying to make sure your monthly Social Security deposit landed on time, you need to put down that phone right now, take your hands completely off the keyboard, and listen very carefully to this critical nationwide warning, because what I am about to share with you in the next few minutes could be the single most important piece of financial protection information you hear all year long. The Social Security Administration has just officially shifted its massive digital enforcement mainframes from standard routine monitoring directly into highly aggressive fraud detection mode. And this new algorithm is specifically targeting American retirees, seniors over the age of 62, disabled beneficiaries, and every single person who receives a monthly direct deposit from the federal government into a personal checking or savings account. The Treasury Department and the SSA are now working together, sharing data at a speed and scale that has never been seen before in the history of this program. And the result is that millions of ordinary bank transactions that used to be completely normal are now being flagged, frozen, and reported to federal investigators without you ever being warned in advance. If you continue to run your bank account the exact same way you have been running it for the last 20 or 30 years simply because you are comfortable, because you trust your local bank, or because you have never had a single problem before, you are actively walking straight into a highly weaponized federal trap that will freeze your Social Security direct deposit, suspend your monthly benefits for up to 60 days while investigators review your account, and in some cases can even cancel the automatic protection status that keeps your Social Security checks safe from garnishment and seizure. This is not a scare tactic. This is not clickbait. This is the new operational reality of the 2026 enforcement environment, and it is happening right now this week in banks all across the United States. Welcome back to the channel, the premier senior financial protection channel where we completely bypass the mainstream bureaucratic jargon that keeps you confused. We absolutely refuse to sugarcoat the harsh reality of the new federal enforcement systems that are being deployed against ordinary Americans, and we give you the uncompromising, data-driven, plain English truth you need to legally protect your wealth, defend your retirement income, and keep every single dollar of the Social Security benefits you spent your entire working life earning. Today, we are comprehensively exposing the 3 specific banking habits that the Social Security Administration and the Treasury Department are now actively flagging as suspicious activity. We are explaining exactly why these 3 habits are so catastrophically dangerous, even though they feel completely normal and even responsible to you. And we are showing you the precise step-by-step legal protection strategy you must use right now before the end of this month to completely shield your monthly benefits and lock down your accounts against this aggressive new enforcement wave. You must fundamentally comprehend that during this critical mid-2026 enforcement window, the Social Security Administration is actively dialing up the sensitivity of its automated fraud detection system to its absolute maximum algorithmic capacity. The federal computer system, which is the massive digital network that watches over every single direct deposit and every bank transaction connected to a Social Security number, mathematically expects a huge surge in fraud attempts, identity theft, and improper benefit claims during the summer months because that is historically when scammers become most active against seniors. Because millions of retirees are unknowingly doing normal banking things that now look exactly like fraud patterns to a machine, the system is generating false positive alerts at a rate that experts have never seen before. And every single one of those alerts leads to a real human investigator opening a real federal file on a real American senior who did absolutely nothing wrong. The first dangerous banking habit that you must stop doing immediately is the habit of moving your Social Security money out of your checking account and into a different account, whether that is a savings account, a certificate of deposit, an investment account, or even a joint account you share with your spouse or your adult child within the first 48 hours of receiving your monthly deposit. This behavior, which feels completely responsible because you are simply protecting your money or trying to earn a little bit of interest, is now one of the top 3 red flags that the Treasury Department has coded directly into its Bank Secrecy Act monitoring system. The federal computers are looking for what they call rapid movement patterns, which is defined as any transfer of federal benefit funds within 48 hours of the deposit hitting your account. When the system sees that pattern, it does not know that you are a responsible retiree trying to protect your savings. It only sees a data signature that matches the exact behavior of a scammer who has stolen a senior citizen's identity and is trying to quickly move the stolen benefits before the fraud is detected. Furthermore, we must urgently expose the second dangerous banking habit, which is the habit of making cash withdrawals from your Social Security deposit in amounts that fall between $3,000 and $9,999, or making multiple smaller cash withdrawals over several days that add up to more than $10,000 in a single month. This behavior triggers what is called a structuring alert, which is a federal red flag originally designed to catch drug dealers and money launderers, but which is now being aggressively applied to ordinary seniors who simply want to have some cash on hand for groceries, medical bills, gifts for their grandchildren, or emergency expenses. You must absolutely realize that the Treasury Department already possesses a complete real-time record of every single one of your ATM withdrawals, every bank counter withdrawal, and every cashback transaction you make at the grocery store. If the total of your cash withdrawals in any 30-day window looks like you are deliberately trying to stay under the $10,000 reporting threshold, the bank is legally required by federal law to file a suspicious activity report against you, and once that report is filed, your Social Security direct deposit protection can be automatically suspended while the Financial Crimes Enforcement Network reviews your case. The third dangerous banking habit, and honestly the one that catches more innocent seniors than any other, is the habit of adding an adult child, a grandchild, a caregiver, or any other trusted family member to your bank account as a joint owner or as an authorized signer at any point after you have already started receiving your Social Security benefits. This one hurts to talk about because it is almost always done for the right reasons. You are trying to make sure that if something happens to you, your family can access the money to pay for your care, your bills, or your final expenses. You are trying to be smart about estate planning. You are trying to help an adult child who is helping you manage your finances. But the SSA computer system does not see any of that intent. It only sees a new name suddenly added to the account where your federal benefits are being deposited, and that new name automatically triggers what the agency calls a representative payee review, which is a formal federal investigation into whether you are still mentally competent to manage your own benefits or whether someone else is attempting to gain unauthorized control over your monthly payments. This intense, panic-driven enforcement environment leads directly into the catastrophic warning that the Federal Trade Commission and the SSA jointly issued just weeks ago about the massive nationwide surge in what officials are calling benefit protection scams. This is a specific fraud epidemic where predatory operators, often calling from spoofed phone numbers that show up on your caller ID as Social Security Administration or Federal Trade Commission, actively target frightened seniors who have just received a letter or a phone call about their bank account being flagged. These predatory operators aggressively promise to protect your benefits, to remove the freeze from your account, to file paperwork on your behalf with the SSA, or to move your money into what they call a secure federal holding account for your safety. They charge you upfront fees ranging from $400 to $4,500. They gain access to your banking information, they drain your accounts, and then they completely vanish, leaving you standing entirely alone directly in the crosshairs of the very same federal investigation that they promised to protect you from in the first place. If your bank account has already been flagged, or if you are simply worried that one of these three habits may have already put a target on your back, you absolutely must not call any phone number that arrives in an unexpected letter, email, or text message claiming to be from the Social Security Administration, and you must never wire, transfer, or hand over any of your money to anyone who promises to fix the problem for you. Your ultimate uncompromising wealth protection strategy is to immediately contact the Social Security Administration directly through the official phone number, which is 1-800-772-1213, or through your official My Social Security online account at ssa.gov, entirely free of charge, to mathematically confirm the actual status of your benefits and to file a formal request for a benefit protection review if you have any concerns. However, you must be hyper-aware of the devastating mathematical trap that is secretly hidden inside the standard benefit protection process itself. Filing a benefit protection review with the SSA legally grants you the right to have a federal caseworker examine your account and confirm that your monthly deposits are secure, but it absolutely does not grant you any immunity from the underlying Bank Secrecy Act reporting requirements at your bank. If you file the SSA protection review but you continue to move your money in the same suspicious patterns, or if you continue to make cash withdrawals in the same structuring patterns, the Financial Crimes Enforcement Network will aggressively continue to build a case against you in parallel, and you can end up facing simultaneous investigations from two completely separate federal agencies at the same time, each one with its own rules, its own timelines, and its own devastating consequences. The correct protective step, and this is the piece of the strategy that almost nobody is talking about publicly right now, is to proactively file what is called an SSA Form 1696, which is the official appointment of representative form, or the SSA Form 787, which allows you to formally designate a trusted representative payee before the government does it for you against your will. When you take the first step and file the paperwork yourself, you keep complete legal control over who has access to your benefits, you keep complete control over who can speak to the SSA on your behalf, and you create a bulletproof paper trail that mathematically proves your intent was legitimate estate planning rather than fraud or incompetence. This is the exact form-based protection strategy that experienced elder law attorneys use to shield their wealthy clients, and it is completely free to file directly with the Social Security Administration. You must also take 3 specific defensive actions at your bank this week, starting today if possible, to lock down your accounts against the new 2026 enforcement algorithms. The first action is to schedule an in-person appointment with a personal banker at your local branch, not a phone call and not an online chat, and to formally request that a written note be added to your account file explaining that all your incoming direct deposits are federal Social Security benefits and that any transfers you make are for legitimate personal financial management purposes. This written note becomes part of your permanent bank record, and it serves as your first line of defense the moment the fraud algorithm flags any of your normal transactions. The second defensive action is to completely stop making any cash withdrawals in the danger zone between $3,000 and $9,999 and to instead either keep your cash withdrawals well under $2,000 per month or, if you genuinely need to withdraw a larger amount, to withdraw the full amount in a single transaction over $10,000 and let your bank file the standard currency transaction report the exact way the law was originally designed to work. Counterintuitively, one large reported transaction is infinitely safer than multiple smaller unreported transactions because the reported transaction generates a clean, transparent federal record, while the unreported transactions generate a suspicious structuring pattern that automatically triggers a criminal investigation. The third defensive action is to never, under any circumstances, add a new joint account holder or authorized signer to any bank account that receives your Social Security direct deposit without first filing the proper representative payee paperwork with the SSA. If you want to give a trusted family member access to your money for legitimate reasons, the correct legal path is to open a completely separate account that does not receive any federal benefits, to fund that separate account through a manual transfer from your primary account, and to add the joint owner only to that separate account. Your primary Social Security deposit account must stay in your name only, must stay under your sole control, and must never have anyone else's name attached to it in any capacity whatsoever. Stop treating your monthly Social Security deposit like a routine low-risk transaction that requires zero attention and zero protection. The federal enforcement environment of 2026 is fundamentally different from anything you have experienced in your entire life, and the automated algorithms that are watching over your account do not care about your age, your history, your reputation, or your good intentions. A single flag transaction is infinitely more dangerous to your long-term retirement security and your monthly income stability than simply slowing down, making your banking decisions carefully, and consulting with the right professionals before you move any of your federal benefit money in any direction whatsoever. Take full, uncompromising control of your retirement income protection strategy right now. Legally shield your Social Security benefits by utilizing the official SSA representative forms and the correct in-person banking documentation process, and absolutely never authorize any bank transaction that you cannot mathematically defend with bulletproof documentation in front of a federal investigator. At this channel, our entire unwavering mission is to completely decode this heavily guarded federal benefit system, cutting through the mainstream media panic and the endless political noise to give you the exact, undeniable mathematical facts you need to legally protect your wealth, defend your monthly income, and pass on every single dollar of your hard-earned savings to the people you love. We refuse to talk down to you. We refuse to hide behind jargon. We refuse to promote products, services, or fake protection schemes that put your money at risk. We simply give you the truth about how the system actually works so that you can make informed decisions that protect your family for generations to come. Remember that this deep dive systemic analysis is strictly for educational and informational purposes only, and it is not intended to serve as personalized legal advice, financial advice, or tax advice for your specific individual situation. You must always consult your personal elder law attorney, your certified financial planner, or your enrolled tax agent regarding the specific intricate details of your individual retirement income situation, your bank account structure, and your family estate planning needs, because every single case has unique facts that can dramatically change which protection strategy is right for you. Ruthlessly protect your hard-earned Social Security benefits at all costs, take the 3 defensive banking actions we discussed today before the end of this week, and make absolutely certain that you subscribe to this channel right now and turn on the notification bell so you never miss another critical Social Security enforcement update as we track these aggressive new 2026 federal rules through the rest of the year and into the massive policy changes that are already scheduled to roll out in early 2027. The next warning we release could be the one that saves your entire retirement, and you do not want to be the person who finds out about a new federal rule 3 weeks after it has already frozen your account. Stop letting the chaotic pace of modern banking dictate your financial destiny and force you into catastrophic, wealth-destroying mistakes that you did not even know you were making. The absolute most permanent, uncompromising benefit protection strategy you can deploy right now is to aggressively utilize the official SSA Form 1696 appointment of representative process to lock down legal control over your benefits before the federal government makes that decision for you. Meticulously verify every single transaction in your bank account against your official My Social Security online transcripts. Completely refuse to authorize any transfer, withdrawal, or account change that you cannot mathematically defend in front of a federal investigator. And never, ever hand over your money to anyone who calls you out of the blue claiming to be from the Social Security Administration. At this channel, our entire unwavering mission is to completely decode this heavily guarded federal benefit system, cutting through the mainstream panic to give you the exact, undeniable mathematical facts you need to legally protect your wealth and keep every dollar you earned. Remember, this deep dive systemic analysis is strictly for educational and informational purposes only, and you must always consult your personal elder law attorney or certified financial advisor regarding the specific intricate details of your individual retirement and estate planning situation. Ruthlessly protect your hard-earned Social Security benefits at all costs, and make absolutely certain you subscribe to the channel right now, hit that notification bell, and share this warning with every single senior, so they can protect themselves too, because the next wave of enforcement is already being programmed into the federal system as we speak, and we will be the very first channel to break down exactly what it means for your money, your family, and your future the moment the SSA makes its next move.